Hello, this is Mick Holly once again, and we've reached the third video in our series. You remember in video one, we talked about investor readiness and having the financial discipline and acumen to be able to get our business in shape so that it was optimizing revenues, profit, and returns. In the second video, we talked about how we could break up that financial story into 5 key chapters: revenue growth, superior profitability, the hunger measure, cash flow, and return on capital employed. In the third video, we're going to talk a little bit more about planning ahead and how you, as owners of the business, can plan for distributions and know that you will have enough equity to be able to pay out dividends, distributions, and yourselves. So we'll take you through a little modeling exercise, and in our course, Running Your Business by the Numbers, we're going to train you to be able to do this for yourselves, and we'll talk a little bit more about how we do that in our live webinar, which will take place on July 27th, more at the end of this video. And don't forget to click the enroll button so your place on the course is assured. Okay, Andre, I'll hand it over to you.
Hi there, Andre Guillen again. When preparing your business for the future, a quick and easy way to start the process is to quickly evaluate what your performance has been like in the past period of time. And what we're seeing is previously, as we've discussed before, we've grown our business fairly significantly, we've made slightly less money, our balance sheet's become a little bit hungry, our cash flow is negative, and our returns are in slight decline. So we're starting to get a feel for, okay, where do we want to improve our business? And now we're in a position to drive our future strategic position of our organization. And the way that we do that is relatively simple. Our starting point is essentially the ability to add a period. So in this case, we're going to add a 12-month period just to get a feel for where we want to be inside our business going forward. So I'm going to do a budget for the next 12 months for the 2016 year, for example. And I can do it a 12-month budget, or I can do a 1-month budget, 2-month budget, depending on what I'm looking for. And I'll simply press the little budget button and we get into our wizard. And what this does for us, this drives the key strategic areas of our business to identify what our business will do going forward. So, for example, let's say we're going to sort of scale our growth down a little bit and maybe bring it to sort of more the 15% range. But at the same time, what we're going to do is we're going to focus more on driving margin as opposed to just pure volume. So we're going to, through the strategy, improve our cost of inputs from 77 to 75. And we notice that our variable operating costs are about 5.75%. And for the moment, we're going to keep it fairly similar to see what that will bring. Our fixed operating costs was about $1.3 million. And we're going to have maybe another salesperson or whatever the new cost structure is going to be. And let's call it $1.4 million for the year. Our depreciation is going to remain pretty much consistent at $95,000. And our average cost of interest will remain at 6%. And we're going to make a little bit of improvement in our receivables. We're going to focus on this area and bring our receivables maybe down to 65. Our inventories are sitting at 74. Remember, that's the inventories and under billings. And we want to keep that down a little bit lower at about 70 days. And maintain a payable position of about 55. And as we said, we're going to keep our depreciation down, so we're not going to have significant capital expenditure going forward. So all we do now is we simply press the update key, and there we have a completed income statement for the next year, our completed balance sheet, and of course our completed cash flow. Now we're in a position to have a look at our scorecard for the next projected financial year. And that says to us that we're going to do $16.5 million and produce about $1.7 million worth of operating profit. Our Our operating profit significantly improves from about 7 cents to 10 cents in the revenue dollar. Our working capital has significantly reduced, as you can see, the improvement in our receivables and our underbillings, and inventory has improved as well, maintaining our accounts payable days, delivering a really powerful cash flow of about $2.3 million. And of course, we can go and quickly look at our cash flow and see what that looks like. And here it is. Here's our cash flow for the next period of time. And we can talk a lot more about cash flow going forward. But there is our cash after operations of $2.3 million. So now we can see, okay, fair enough. We're going to be generating about $1.5 million after interest. And we have to consider our tax position. So we simply go into our profitability analysis area and go and put in, let's say, our average tax rate of 30%, even though we may be an S corporation or an LLC, for example. This really just sort of provides us with our imputed tax. And then once again, now we're in a position to see, well, how much distribution, pure distribution, are we going to provide for our owners? And that's really what we call the equity trap, so that we clearly differentiate between what is the distribution for tax and what is the distribution because we are owners in our business. So in this case, we're going to sort of talk about a 50% distribution rate, and that's going to give us a $500,000 distribution. And at the same time, we can quickly see that that distribution will allow us, from a cash flow viewpoint, to deliver the distribution without impacting our cash flow, or at least not putting our cash flow in a negative position. So there, in a very reasonably quick way, we've now shown you how to prepare the business for the future and deliver an income statement, balance sheet, and cash flow statement for the future. And now we can sort of break that down and put it into the various quarters so that we've got clear milestones as to how we're going to achieve our strategic plan, getting us one step closer towards investor ready. Thanks for now, Andre.
Thank you, Andre. Well, we've now completed all 3 videos, Becoming Investor Ready, the 5 key measures for helping you steer your business to success, and how to build equity and not lose that equity so that you've got a long-term wealth generating business. And we've got our webinar coming up. What we're going to be doing on that live webinar is really showing the course curriculum. We're going to be sharing some training with you over the next 12 months. This is a program that StarNet has invested in on your behalf. We're very excited to be able to deliver this to you. And what we're going to do on Wednesday, July the 27th, is take you through what that curriculum looks like and get you ready, and to be able to send you the software that will enable you to input your data into the system in order to build your dashboard and drive your financial performance to investor readiness. So the webinar will be taking place on Wednesday, July 27th, and the time will be between 1 o'clock and 2 o'clock East Coast time. And what we'll be doing, we'll be sending you a link to a GoToMeeting invitation. That link is going to be sent to the email address that you've used to enroll. So if you haven't already enrolled, please click below and enter your email address so that we can send you that GoToMeeting link. We'll take you through the course curriculum, how it's going to flow out, and we'll be doing some training, some live training on that course. Very excited about that, and look forward to seeing you on the webinar on Wednesday, July 27th at 1 p.m. Eastern.